You think you know what XRP is being used for by Ripple, but I'll tell you something that most people miss. This year, Ripple has been making a lot of small announcements. These announcements are not random. They are like puzzle pieces that fit together to make a big picture. The goal is simple: to get so many institutions on board with DeFi that we've never seen it happen before. This is the main plan. This is not advice about money. This is where things get crazy. The idea of tokenizing real-world goods is talked about by everyone. Stablecoins are talked about by everyone. But most people don't get why RLUSD is such a big deal and why Ripple is so interested in stablecoins right now. Let's break it down. Let's say you want to make the stock market work with chains. You want to trade Apple or Tesla 24 hours a day, 7 days a week. You can take out a loan against those stocks right away, or you can trade them out for a return at any time. That sounds like the new world, right? But there's a catch. Without a rock-solid layer of liquidity, that kind of structure falls apart. We can help with that with stablecoins. Tokenization is held together by stablecoins. Fuel for cash pools is what they are. They're what make it possible to borrow and give money. Everything falls apart without them. Now, with RLUSD, Ripple is making a strong move to take over that stablecoin area. Why? They won't use a sketchy, unregulated product that could go away tomorrow because they trust the organizations. They need something that is legal and can't be broken. Yes, that's exactly what RLUSD is becoming. There are nearly $200 million worth of stablecoins in circulation. Besides that, 18 different tokenized real-world goods are already live on the blockchain. There are 4 different stablecoins in use. This is just the start. The new stablecoin from Brazo Crypto is called BBRL. Also, guess what? $191 million poured into that coin almost right away. That's just one job. That's nothing compared to RLUSD, which is getting close to $700 million in value created on the XRP ledger. Almost $700,000 worth of cash is moving through Ripple's rails at that rate. It keeps getting bigger every week. There are now more stable coins than ever before, but they're still not as popular as the big ones. For example, there are about 2.5 million USDC in trade on the ledger right now, 500,000 here and a few million there. It all adds up, though. How fast is the growth? Out of this world. Take the tokenized T-bills from OpenEden. They've grown by 2.71% in the past week and by almost 3% in the past month. They've reached 78.5 million now. That's real-time acceptance at the institutional level. On the XRP ledger, you can see money moving from traditional banking to tokenized assets. But what's the real rocket fuel? RLUSD by itself. RLUSD has grown by almost 30% in the past 30 days. Take a look at that. The value of a brand new stablecoin is rising at a rate that most projects could only dream of. Things become very clear when you add that growth to everything else going on in this environment. Ripple isn't just trying new things. They are carrying out their plans. Let's get a bigger picture now. Private credit is at 135 million. U.S. bonds are at 116 million. Stocks tokenized on chain are at 55 million. Real estate is at 4.3 million and rising. And this is just the beginning. What's behind it all? Why is there so much money coming into the ledger at once? It all comes down to the changes that Ripple has been putting out all year. Traders who are automated, DEX with permission, systems for credentials. These aren't just tricks. These are the exact qualities that big players in the market have been asking for years. There must be compliance lines in order to bring trillions of dollars on the chain. Banks and big funds can't join the ecosystem without name verification and environments that only certain people can access. It was built by people at Ripple who knew this. Finally, here's what you get. The XRP ledger is going crazy with stablecoins now that the basis is in place. The tracks are set up. The tools for compliance are now ready. Now, institutions don't have to worry about officials being on top of them. They can use everything DeFi has to offer while still following the rules. XRP Scan confirmed just last week that the change to credentials is now live on the mainnet. That's an important time. Now institutions can give out credentials that can be checked straight on chain. When you add in permission domains and DEX, you have a completely legal playground for big businesses, banks, and funds. This isn't a blockchain fix made by a hobbyist. This is infrastructure for businesses. Also, guess what? The very first badge has already been made. That's how quick it is going. The rate of change on the XRP platform is faster than at any other time in its history. There have been more breakthroughs in the last year than in the 3 years before that put together. And I'm not making that up. It's easy to see what the numbers and changes mean. Because of this, Ripple has been hitting establishment DeFi hard all the time. They know how much it costs. It's not even close to $1 billion. It's trillions of dollars. Huge amounts of money are about to move on a chain. That money doesn't just sit there once it's in the system either. People lend, borrow, sell, and swap it. Every dollar that moves through liquidity pools makes money, boosts growth, and raises the demand for XRP. Also, don't forget that XRP is what makes this work. It hasn't been down since 2012 when it started. Institutions aren't going to put their money on a brand new blockchain that hasn't been tried yet. They want to know you can be trusted. They want infrastructure that has been through a lot of battles. That's exactly what XRP Ledger gives you. Now add this. Permissioned DEX. These completely change the game. For the first time ever, institutions can set up order books where traders who have been checked out can only trade. All of the boxes for compliance are checked. We take care of KYC. There are professional qualifications built in. You don't lose decentralization, though. To save money, you don't give up anything. It's great in every way. Institutions can create their own trading environments that are driven by the XRP ledger. Also, XRP is still in charge of connecting assets. In the end, every deal, whether it's in stable coins, tokenized stocks, or real estate, is linked to XRP. It has flow through it. People are forced to buy it. XRP is like the oil that keeps the whole machine going as more and more trillions of dollars flow into institutional DeFi. This is something that most people don't know. Ripple didn't find this by accident. This is how they planned it from the start. They were able to see where the world was going and start preparing years in advance. That's why these puzzle pieces are fitting together so well right now. DEX with permissions, RLUSD, credentials, and stablecoin trading, everything is going to the same place. The XRP system is getting a lot of institutional money. It's impossible to go back after that. There's no stopping big money from moving on to the XRP ledger once it does. Things go off like a snowball, it gets more valuable, more money comes in, the returns go up, and bigger people can't help but join. And that's the great thing about network impacts. And we're seeing those results happen on the XRP ledger right now. So let's look into why Ripple is set up differently than everything else. First, look at the list of products they've made: payments, stablecoins, custody solutions, and top-notch trading services. It's more than just a system and a token. It's a full-on environment for money, and every single piece is made to meet standards. Ripple didn't skimp on anything. They went out and got real licenses from the government, even in some of the strictest places in the world. That's why banks feel at ease talking to them, and the level of trust is very high. It's been around since 2012. Now, take a moment to think about that. Ripple has been running, building, and growing for more than 10 years in a field where projects come and go in a single cycle. Institutions care about that track record. They don't want to risk a startup that has never been tried before and has no experience. They want a partner who has always been there for them through good times and bad, as well as legal fights. That's the Ripple. Let's talk about RLUSD one more time. Because they fixed the problem of fluctuation, stablecoins rule crypto. But the majority of fixed coins used today were made for sale. This is the reason why Tether is used everywhere. Anyone in any trade can use it easily. There is something else that institutions need, though. They need regulations to be clear. They need to be open. They need a stable coin that can handle audits, license requirements, and criticism from around the world. All of those are true for RLUSD. New York, which is the gold standard for financial control, gave it a license. Because of that one thing, it is not like any other stablecoin. RLUSD isn't just another coin that Ripple is making available. It will be built right into their payments and DeFi environment. In other words, RLUSD is more than just a dollar on the blockchain. It's what makes Ripple's enterprise-grade rails work for trading, borrowing, lending, and settlement. And XRP is touched every time RLUSD moves. It's used for account reserves, transaction fees, and deals that need to be held up. Ripple made it so that XRP is always part of the growth and benefits from it. Let's move on to something bigger. Delivery versus payment, DVP, and repositories on the blockchain. These may sound like dull business terms, but in the world of institutions, they're absolute monsters. The term DVP means that both the asset and the payment settle at the same time. It's very important for lowering risk in big deals. The market for repos or buyback agreements is worth trillions of dollars. It's where businesses borrow money by selling securities with the promise to buy them back later. Both of these are important parts of global banking, and Ripple is making on-chain versions that use XRP Ledger to power them. That's not a lie. That's technology that changes things. Now think about what will happen when banks can handle DVP and repos deals on-chain with full compliance, no fees, and instant settlement. It saves a huge amount of money, but what's even more important is that it opens up new ways to be more efficient, fast, and liquid that old methods can't match. Again, XRP is in the middle of it all, connecting assets and making deals possible. Custody is another very important piece of the story. Businesses and organizations can't just store their cryptocurrency in any wallet app like regular people can. They need custody options that are as good as those used by banks and meet strict security and regulatory standards. That's exactly what Ripple's safekeeping service is for. It lets institutions hold XRP, RLUSD, and other tokenized assets safely and in a way that is in line with all the rules. That's one more thing that can be done to adopt. Next is Ripple's network for making payments. They made their name here in the beginning. It is now used in more than 90 passageways around the world. A sum of more than $70 billion has already been handled. That's not just an idea. That's live in the real-world use. Plus, payments can be made in either XRP or RLUSD based on what the customer wants. RLUSD is used by people who want fast crypto with stable value. They use XRP if they don't mind how volatile it is and want to get the most out of it. You have a choice. The method was made flexible so that it could meet different needs, and that's exactly what makes people want to work with you. Consider how these parts fit together. Deposits, withdrawals, stablecoins, DVP, repos, DeFi, and permissioned DEX. It comes with everything. In crypto, most companies only work on one part of the pie. Ripple is giving away the whole pie. That's why banks and other financial companies choose them as their partner of choice. They do more than just give tech. They're giving you everything you need to properly and safely use the tech on a large scale. It gets even stronger here. For safety reasons, Ripple is putting a lot of effort into zero-knowledge technology. In some deals, institutions need to keep things secret. Prime dealers and asset managers don't want the public to be able to see information about their clients. If Ripple figures out how to make zero-knowledge solutions work for XRP Ledger, that will give institutions the protection they want without giving up the openness regulators need. It strikes the right mix. It also puts Ripple years ahead of other blockchains that are trying to do the same thing. For now, let's look at the growth numbers again as they tell the most complete story. $135 million in private loans, $116 million in treasuries, $55 million worth of tokenized stocks, land worth $4.3 million, over $300 million worth of stablecoins, and going up quickly. These are real use cases, not just ideas. These are real XRP ledger markets that are up and running. They're getting bigger every week. When the credentials amendment goes into effect, it will change even more things. Decentralized identity is something that has been lost for a long time. Institutions can't meet compliance standards if identities can't be checked. Now, XRP Ledger already has that feature built in. When you add permission domains to it, you get the holy grail. Regulated DEX trading platforms that run directly on the blockchain. Institutions can take part with full trust, regulators are happy, and there are no limits on how much liquidity can grow. Also, don't forget how important cash is. In the financial markets, liquidity is very important. The difference between a system that works and one that falls apart is this. Liquidity flows through both permissioned and unrestricted settings because of how Ripple is designed. The trouble that other chains had is fixed by that hybrid model. Others failed because they couldn't get or keep liquidity. XRP Ledger, on the other hand, does very well because it has both open involvement and regulated options. Now that you see the big picture, you can see why Ripple is so sure of their plans. They aren't after store hype. They aren't putting out tricks or following trends. They are building a system that is regulated, compliant, and scalable so that it can handle trillions of dollars. That's why they're at the same table as banks, asset managers, and other big institutions. They're talking the same language and giving players the exact tools they need. The ripple effects are huge, if you get my joke. XRP use goes up every time RLUSD goes up. XRP Ledger demand grows every time a new RWA coin is released. XRP is a better bridge asset every time a bank sends a payment through Ripple's network. It's built so that when you do well in one area, it immediately helps you do well in the others. It's a loop that keeps going. The best part, this is not a dream about the future. The event is happening now. The credentials are real. The permissioned DEX are now live. You can now use stablecoins. Credit and funds that are tokenized are now live. A lot of payments worth billions of dollars have already been handled. Ripple has already shown that their plan works. Now all that needs to be done is to make it bigger, and institutions are already lined up to join. That's where we are now. Ripple has been building, testing, and getting ready for this wave of acceptance for more than 10 years. The wave is now beginning to crash into the shore. There will be trillions. From here on out, the only question is how fast and big the growth will get. It's very clear when you zoom out and look at the timeline closely. Ripple has been slowly getting ready for one of the biggest changes in the history of money. While most people were busy with hype coins and short-term bets, Ripple set the rules for how global finance would work. Now, those tracks are about to get flooded with money from banks. But most people miss this. This isn't just about how well Ripple does as a business. It has to do with the XRP system. Ripple has worked for years to make sure that the XRP system is open source, decentralized, and can work without Ripple. That way, acceptance can happen on a large scale without being slowed down by a single group. For settlement, institutions can use either RLUSD or XRP and can connect straight. At the same time, Ripple acts as a guide, not a guardian. It's a big difference because all the other organizations that are interested in blockchain are either too centralized to gain trust or too decentralized to meet compliance. The XRP system is one of the few hybrids that meets both needs. That's why it's starting to get real players while other projects get stuck in pilot programs that never grow. We need to talk about why the tokenization wave is so important in this case. Tokenizing real-world assets is something that everyone has heard of, but not many people really understand how big it is. The market in question is expected to be worth $16 trillion by the end of this decade. It's not a mistake. In the future, blockchains will store trillions of dollars worth of assets, such as stocks, bonds, real estate, commodities, and even private credit. And Ripple has made the XRP system the best place for those assets to live. Think about personal loans for a second. It has already grown to be worth $1.7 trillion and is growing faster than public credit. A lot of institutions are getting involved because the returns are high and there is a huge market. Think about a part of that market that runs on the XRP system. The first signs are already here. Tokens worth $135 million and growing. There is the beachhead. Scaling up happens quickly once the proof of concept is proven. The same is true for government bonds. U.S. Treasuries are the gold standard when it comes to safe investments that pay interest. The XRP ledger already has $116 million in tokenized funds that are being used. Again, it's small today, but the early base is there, and you can bet that adoption will go through the roof once banks and asset managers figure out they can buy, sell, and settle treasuries quickly and for less money. Even tokenized stocks are going public. $55 million may not sound like much in the grand scale of global stocks, but it's the start of something much bigger. Equities on chain will be standard once regulators are happy with them, and there is enough money to buy and sell them. Again, the XRP ledger is ready with tools for compliance, trading environments with permissions, and credentials that can be checked. Then there's homes for sale. So far, $4.3 million have been tokenized. That's a small part of the $300 trillion world real estate market, but it shows that the idea works. Plus, more real estate investment trusts, funds, and REITs are looking into tokenization. XRP Ledger is one of the few platforms that can safely accept both individual and business users. Each of these groups, credit, bonds, stocks, and real estate, is like setting off a fuse. And when they all catch fire, they all become popular at about the same time. People don't give that exponential shape enough credit. At first, it seems slow, a few million here, a few hundred million there. When confidence grows and liquidity increases, however, you wake up to find that trillions have moved onto the chain almost overnight. Ripple has built machinery that makes sure XRP will gain value from this change. The reason for this is that XRP is required in this system. The fibrous tissue is what it is. It's needed for payment in RLUSD. It is needed to connect tokenized assets. It's necessary for DEX to have cash on hand, and payments need it to work smoothly. Every action institutions take in Ripple's ecosystem raises the demand for XRP, even if they are not aware of it. This is where the feedback loop can't be ignored. When more people adopt, there is more liquidity. There are more goods when there is more liquidity. More institutions are drawn to more products, and more adoption is caused by more institutions. As the system grows, XRP sits in the middle of the flywheel and takes in demand and utility. Don't forget about the whole world issue. Ripple is rapidly growing outside of the US. They already have licenses in place in the UK, Singapore, Dubai, and other major cities. That global reach makes sure that adoption keeps going even if one country moves slowly. The train keeps going even if one country takes a long time. In this way, Ripple lowers the risk of regulatory uncertainty. As they have expanded their product line, they have also expanded their business into new areas. At the same time, everything changed when Ripple won its case against the SEC. The decision that XRP is not a security on secondary markets made things clear for institutions. That cloud of doubt that had been over XRP for years is now gone. Now that the case is over, Ripple can move forward at full speed. The fact that adoption rates have gone up faster since then is not a coincidence. This makes me think of the early days of the internet. In the beginning, it looked like a niche test. Then slowly, infrastructure got better, institutions got used to things, and all of a sudden, the world changed forever. We're at the same point of no return with XRP Ledger right now. The pipes are in place, the rules are followed, and the money is beginning to flow. If trillions move on-chain, that's not the question. The question is when. Now is the time to stop and think. Most investors don't do anything until the wave has already peaked. The uneven upside will no longer be there by then. Soon the early window will close, giving you the chance to get in before adoption becomes common. Things will be different once every bank, fund, and institution is linked to XRP Ledger. XRP will no longer be seen as a risky bet after that. It will be seen as building stuff. Also, building things doesn't come cheap. This is why it's so important to pay attention now. The number of adoptions seems small right now compared to the end goal. But that's the catch. $55 million in tokenized stocks makes people laugh, but they don't know that it's the start of trillions. They don't see the $135 million in private credit as important because it's just the beginning of a $1.7 trillion market. They miss the trees more than the forest. In the past, people who could see the curve before it bent made the most money. Ripple staff whisper XRP will be geeky, unbelievably expensive, geeky on